Apple is one of the most valuable companies in the world, with a market capitalization above $3 trillion. Apple dominates consumer technology, smartphones, services, wearables, and global brand loyalty. But investors are now asking, can Apple continue delivering strong returns from current levels? In this video, we'll analyze Apple's financial performance, revenue growth, profitability, AI strategy, risks, cash flow and buybacks, and finally, the technical outlook for AAPL stock. My name is POURIYA, and if you enjoy videos about investing, macroeconomics, commodities, and financial markets, make sure to subscribe and turn on notifications. Apple is no longer just an iPhone company. Its business ecosystem now includes iPhone, Mac, iPad, AirPods, Apple Watch, services, and AI integration. The iPhone still generates roughly 50% plus of Apple's total revenue, but services have become increasingly important. Apple's ecosystem creates massive customer retention. Once users enter the Apple ecosystem, they tend to stay for years. This is one reason Apple continues to maintain premium pricing and strong margins. Apple continues generating enormous revenue. Recent annual revenue has remained around $400+ billion, and recent quarterly revenue exceeded $111 billion. Even during uncertain economic conditions, Apple remains one of the strongest cash-generating companies in the world. However, growth has slowed compared to earlier years. Why? Because smartphone markets are more mature, upgrade cycles are longer, consumers are spending more carefully. This means Apple increasingly depends on services, AI, and ecosystem expansion. If you enjoyed our previous videos about uranium, copper, or silver, you can check them through the cards section above. One of Apple's biggest strengths is profitability. Apple's gross margin recently approached 47%, and net profit margins remained near 27%. These numbers are extraordinary for a company this large. Apple controls hardware, software, services, and distribution. Very few companies have this level of vertical integration. This allows Apple to generate over $100 billion in annual net income. Apple is not just a technology company. It is a global cash flow machine. One of the most important parts of Apple's future is services. This includes App Store, iCloud, Apple Music, Apple TV Plus, Apple Pay, subscription products. Services revenue has now become a $100+ billion annual business. And services generate higher margins than hardware. This is important because subscription revenue is more stable, more predictable, and less cyclical. Many investors believe services will become one of Apple's biggest long-term growth drivers. Despite its strength, Apple still faces major risks. These include slowing iPhone growth, China exposure, AI competition, regulatory pressure, supply chain dependence, and geopolitical tensions. China remains extremely important for Apple, both as a manufacturing center and a consumer market. At the same time, companies like Microsoft, NVIDIA, Google, and OpenAI are accelerating the AI race. Investors now want to know, can Apple remain dominant during the AI era? Artificial intelligence could become Apple's next major growth story. Apple has introduced Apple Intelligence. The company is integrating AI into iPhones, Siri, productivity tools, personalization, and device-level processing. Unlike some competitors, Apple focuses heavily on privacy-focused AI. This may become a major advantage. However, Markets still want stronger proof that Apple can aggressively compete in AI. AI may become one of the biggest long-term catalysts for Apple stock. Apple generates enormous free cash flow, and the company aggressively returns capital to shareholders. Apple has spent hundreds of billions of dollars buying back its own shares. Recently, Apple announced another $100 billion buyback authorization. Buybacks matter because they can increase earnings per share, improve shareholder value, and support long-term stock performance. However, investors should also remember that many major market participants have already taken profits during recent rallies. This means risk management still matters. Now, let's analyze Apple's chart technically. At the moment, Apple stock is trading near $308. The overall trend remains bullish on the higher time frame. However, after a strong rally, the stock may be entering a potential correction phase. Based on weekly Gann-style corrective expectations, a reasonable pullback zone could be around $280. If this correction happens, some traders may begin looking for short-term buying opportunities. Current important levels: resistance $310 to $325, support around $280, major trend support, lower weekly structure zones. The stock still looks technically strong overall, but risk management remains extremely important. Let me know in the comments. Do you think Apple can continue higher, or is a deeper correction coming? Apple remains one of the strongest companies in global markets. The company still dominates consumer technology, brand loyalty, profitability, ecosystem strength, and shareholder returns. But investors must continue watching AI competition, slower growth, China exposure, regulation, and broader market conditions. The biggest question now is, can Apple continue creating trillion-dollar value during the AI era? Thank you for watching. My name is POURIYA. If you enjoy videos about investing, macroeconomics, commodities, financial markets, and technology, make sure to subscribe, like the video, and turn on notifications. And remember, this video is for educational and informational purposes only and should not be considered financial advice. Financial figures, projections, and technical scenarios may change depending on market conditions and future developments.